Hi everyone, today also we are going to discuss a question from the area NPV in the A-level accounting paper. So today we are going to do the 2021 paper 2 question number 4 part A. So you have 10 marks for this particular question. You know normally NPV is a calculation that you are getting for all the papers. So let's start the question. Let's read the requirements. They ask in the initial cash outflows and cash inflows from the project and NPV and the recommendation. Now let's read the scenario. When you are reading the scenario, please do not read the scenario for the sake of reading. When you are reading the scenario, read it with the proper understanding and note down whatever the important areas that you need. So let's read it. Gamage PLC is considering to acquire a high performing machine to produce electronic items to the local market. So this Gamage PLC is going to purchase a machine to produce some electronic items for the local market. The estimated price of the machine is 6.5 million. So they have given the purchase cost 6.5 million. Then what you have to understand, this is an amount that we have to spend if we are purchasing the machine. So this is a cash flow which is going to happen in year 0. That means today, in the present. Further, the transportation cost and the installation cost. Transportation cost is how much? 50,000. Installation cost is how much? 200,000. So ask the question from yourself. This 50,000 and 200,000 you are going to incur because of the investment or not? Because of the investment means what? Incremental or not? So this 50,000 which is the transportation cost, why you will incur? Because you are going to purchase the machine. No? If you are going to purchase the machine, you have to transport it. So you are going to incur the transportation cost 50,000 because of the investment. So this is an incremental cash flow. You have to consider this cash flow. So this is also amount that you have to consider for the year 0. Now let's see the second one, which is the installation cost. Installation cost 200,000 are you incurring because of the investment? Yes. Because you are purchasing the machine only, you will have to install it. If you are not purchasing the machine, should you have to install it? No, right? So this 200,000 also you will incur because of the investment. So this is also cash flow which is going to happen in year 0. So these three are certain cash outflows which is going to happen in year 0, which is the present or today. The useful life of the asset is estimated to be 6 years. The working capital requirement at the beginning. So at the beginning itself, we have to pump in money, we have to give money. So my money is going to go out. How much is that? 550,000. So what you have to understand, this 550,000 cash outflow. Cash outflow is going to happen in year 0. And next what they are telling is it can be recovered. It can be recovered last year of the project. So what's the last year? This is a 6-year project. So this whatever the money that you are investing for the working capital purpose, you can get it back. So here when I am starting the project, I am not going to give money only for the machine. Once you purchase the machine to run the business, you need money, right? To purchase materials, to make the payments to your labor, you need money. So for this working capital purpose also, I am going to give my cash is going to go out. How much? 550,000. But what they are telling is once the project is over, whatever the money that I gave for the working capital purpose, I can get it back. So it's going to be a cash inflow to me in year number 6. Because at the end of the project, I can get this money back. The residual value of the machine, it is 750,000 residual value. That means once I use the machine for 6 years, I can sell the machine for 750,000. Then I will get money. I will get money. So this is a cash inflow which is going to happen in year number 6. So I will write this one also inside the brackets. Why I am writing inside the brackets? Because I want to indicate it as cash outflows. So very simple. When I am reading the scenario itself, I am marking everything that I need. So that's what I told you. When you are reading the scenario, please read it with the proper understanding. Then guys, what will happen? You are not required to read the scenario again and again. If not, what most of the students will do, they will just read the scenario. When they are attempting the question, again they will read the scenario. Don't do like that. It is a waste of time. So this is a run with the time. So try to save your time. Okay. The expected annual profits. This is one of the very important areas in this question. Here they have not given the cash flows. In this question, what they have given? The profits. You know, to calculate the NPV, we have to take the net cash flows. We have to take the cash flows. We are not taking the profits to calculate the NPV. We are not taking profits. We are taking the cash flows. But in this question, what they have given? They have given the profits. So remember, in this question, when you are calculating the NPV, using these profits, you have to find the cash flows. So let me give you a small learning here from this particular question itself. Normally, you know, in a business, you have income. From the income, if you deduct your expenses, all the expenses, what you will get? You will get the profits. You will get the profits. Normally, that's how it will happen. So let me change the color. So income will assume your all the income is cash. Okay, if it is cash, you will get cash inflows because it's income. Expenses in a business, there are two types of expenses. One expense is cash expense. In cash expense, what will happen? You will pay cash. So there is going to be a cash outflow. And another expense in a business that you have, non-cash expense. So in a business, two types of expenses are there. One is the cash expense, other one is the non-cash expense. Okay. So here see, from my cash inflows, now I am deducting only the cash outflows. Ideally, from your income, you have to deduct cash expenses, non-cash expenses, both. So currently I am deducting only the cash expenses. So from cash inflows, if you deduct the cash outflows, what you will get? You will get the net cash flows. So from the net cash flows, if you deduct the non-cash expense, what is the most famous example for the non-cash expense? It is the depreciation. So then what you will get? Now here see, from your income, we are deducting, or we have deducted the cash expense and non-cash expense. What you are getting? You are getting your profits. Now I am going to talk little bit about this part. Listen carefully. What is this part? From the net cash flow, if you deduct the non-cash expense, what is the non-cash expense that you have? Depreciation. What are you getting? Profits. So here in this question, I don't want profits they have given. What I need the net cash flows. So if you need the net cash flows, what you have to do for the depreciation, which is the non-cash expense, you have to take it to other side. So equals profits plus depreciation. So this is how actually they have created the formula to find the net cash flow. So when you are studying something, study properly. Don't study for the sake of studying. So to calculate the net cash flow, you might have studied, yes, for the profit, add back the depreciation. Why? This is the reason. So somehow for this particular question, for the profits, I have to add back the depreciation for me to get the cash flow. So I'll just write a note and keep. If not, I will forget it. So I'll write it. Add depreciation to get the net cash flows. Fine. So first one, what they are asking, first requirement, initial cash outflow of the project. So let me go to the answers. Here I'll write question number, I think this is question number 4. Part A. Question number 4, part A, under that 1. So here we have to calculate the initial. That means the outflows which is going to happen immediately. So what are the outflows? We note it down. So I'll just highlight it using a different color. This is the initial outflow which is going to happen. This is a year 0 outflow. This is a year 0 outflow. This is a year 0 outflow. So these are the outflows which is going to happen in year 0, which is the initial outflows. So I'll write it here. First one is the purchase cost. Purchase cost. How much is the purchase cost of the asset? 6.5 million. Then what else I have? I have the transportation cost 50,000 and installation cost. Transportation cost 50,000. Then installation cost 200,000. Installation cost 200,000. Not only that, here see, for the working capital purpose I have to give 550,000. Later I will get it back. That's a different case scenario. In this one what they are asking is initial cash outflow. That means year 0 cash outflow of the project. So how much is that? So here working capital, how much is that? 550,000. So let me get the total here. 6.5 million, 6,500 plus 50,000 plus 200,000 plus 550,000. I am getting a value of 7.3 million. 7.3 million. So this is the answer for the part 1. And the second part of the question is cash inflows for each year of the project. So this particular project is there for 6 years. Then I'll write the cash inflows. Year 0 there are no cash flows. So I can start off with maybe year number 1, then year number 2, year number 3, year number 4, year number 5 and year number 6. So first let's take the profits of each year. For the profits we have to add back the depreciation, then only I will get the cash flows from the operation, because as I explained to you all here, to get the net cash flow for the profits you have to add back the depreciation. So let's write the profits: 550, 800, 950, 550, 800, 950 and 1250, 1050, 1250, 1050 and 750. So let's calculate the depreciation. So how to calculate the depreciation? I'll write it over here. Depreciation cost minus the residual value, if not the scrap value, divided by the useful life. So the cost of this particular asset is how much? What you have to understand in this particular question, the cost of the asset is this amount. Working capital is for the operational work. For you to purchase the asset, when you are purchasing the asset, you have to consider all the costs that you will have to incur from purchasing the asset and taking it for your business operational place. Till that, whatever the cost that you are incurring during that time until you install the machine, all the cost you have to consider for the cost of the asset. So here what is the cost of the asset is going to be 6,500, 6,550, 6,550 plus 200, 6,750. So here it is how much? 6,750,000 minus this particular asset has a scrap value of how much? 750,000. 750,000. So useful life of the asset is 6 years. Then here 6 million is your numerator, denominator is 6. Then depreciation per annum, how much is that? 1 million. Depreciation per annum is 1 million. So you have to add back the depreciation. So here I am doing the calculation in thousands. Okay. So I'll add back the depreciation. I'll add it back. Each year 1000. Here also 1000. Here also 1000. Here also 1000. So now let's take the cash flows from the operations, or net cash flows from the operations. Net cash flow from operations, business operations. 1550, 1550, and here 1800, here 1950, here 2250, here 2050, and here 1750. And not only that, we have other cash flows as well. Here see, by selling the asset, I will get 750,000, and this one also you have to consider it for the year number 6. After the project is over, I can get whatever the working capital money that I have invested. Then let's write it there. Here working capital recovery 550,000, and the residual value it is 750,000. So let's get the net cash flows for each year. Net cash flow for each year. Here 1550, here 1800, here 1950, here 2250, here 2050, here 1750, 2500, then it is 3050. So we are done with the second one as well. So these are your net cash flows for each year. Net cash flows for each year. Done. Now let's move to the third part of the question. They are asking us to calculate the NPV. How to calculate the NPV? You know, your net cash flow should be multiplied by the discounting factor for you to arrive at the present values. So here I'll write year 0, year 1, year 2, year 3, year 4, year 5, and year 6. So let me take the net cash flows. Year 0, how much is the net cash flow? It is 7.3 million. That means 7,300 negative. So it's cash outflow. Then first year 1550, and second year 1800, third year 1950, fourth year 2250, fifth year 2050, sixth year 3050. So now let's take the discounting factor in this question. Discounting factor is 12%. Always year 0 discounting factor is 1. So let's take it for the remaining years as well. Here 897971, 89, 0.89, 0.79, 0.71, 645751, 64, 0.57, and 0.51, 0.51. So I'll write it 0.51. Then let me get the present values. 7,300 negative, 7,300 negative, 1550 into 0.89, I'm getting a value of 1379.5. Here 1800 into 0.79, I'm getting a value of 1422. 1950 into 0.71, I'm getting a value of 1384.5. Next one, 2250 into 0.64, it is 1440. Here 2050 into 0.57, I am getting a value of 1168.5. 1168.5. Next one, 3050 into 0.51, it is 1555.5. 1555.5. So now let's calculate the NPV, net present value. So this is a negative one, don't forget, negative 7300 plus 1379.5 plus 1422 plus 1384.5 plus 1440 plus 1168.5 plus 1555.5. So I am getting a value of 1050 positive. So 1050 positive means it is 1,050,000. 1,050,000. So this is the answer for the third part of the question. Next, what they are asking, the recommendation. So what is the recommendation? You know, normally if the NPV is positive, you have to accept. If the NPV is negative, you have to reject it. So this is a positive NPV, then you can write the recommendation. Since the NPV is positive, it is recommended to proceed with the investment. It is recommended to proceed with the investment. So this is how you can do a NPV calculation. And this is not only the NPV calculation that I have done for other past papers as well. So you can click the whatever the playlist which is appeared on the screen now, and you can watch whatever the other NPV past paper questions that I have discussed.